Alrighty guys, welcome to episode 7 of today's trading series, and we are going to be getting into how to journal your trades. And this is a huge step in trading in general. This is where you become a actual profitable trader and not a gambler with extra steps. This is when you get exact feedback on the little inconsistencies that you had in trading, and now this will make the forever model your model. So let's kill that journaling is optional. Journaling is not optional. If you want to actually see consistency in trading, you have to start journaling your trades. People think they lost a trade and people think they sized up because it wasn't emotions, but it is like a mirror. A mirror is your journal. You're going to see what you need to see in that moment, and you got to realize you have to fix it. Your goal as a trader is to be hyper self-aware. That's when you scale. That's when you grow as a trader. And that's when you actually start seeing progress and real consistency. So we are not tracking random numbers on the chart. We are trying to get exact executions. Why you placed your stop loss there, why you had your take profit in that area. We're going to get into that, and these are the 10 steps in how to make your journaling quicker, and I'm going to put it up for you. We are not tracking down random numbers on the chart. We are seeing why you exactly put where your entry, where your stop loss, where your take profit was. So let's look onto the screen. So I have my journaling software up. I use TradePath AI. I think Justin Werlin made it. And these are the 12 checklists that you need. You need to have a screenshot of your setup. You need to have the time frames. Was there a change in the state present? Was there a fair value gap clean? Was there an SMT confirmed? You need to make sure your entry is completely clean before you start anything. Why did you put your stop loss there? Why'd you put your take profit target? Why'd you take partials? Your trade results. Did you win, lose, break even? Did you follow your plan? Yes or no? Your emotional state 1 out of 10, and then one lesson from the trade. You have to give a reason why you entered the trade, and you want to go over a full analysis, and I'll have it shown up for you. If you track those things, not just your P&L, not if you went green on the day, just those, you will get better 10 times faster than anyone trying to target or trying to make money. So now I'm going to have an example of how I trade and how I enter. So I have an example here for my trading view. So say I took this trade. We have an SMT here. This take profit, change in the state for value gap, first TP, last TP, and why I had all these things. I didn't actually take this trade. This is an example. So I would zoom into the 15-minute time frame. I would zoom in. I would copy image. I would move down to my trading software. I would put log trade, and let's say I made $600 in the day. I traded futures. I traded NQ. I had my rules. I had IC change in the state. I had SMT, confident draw and liquidity. I had liquidity and manipulation. So I would put my screenshots in, add screenshot 15-minute, and I would just Control C, paste my screenshot. I would then go to the 5-minute. Then I would go back to my chart, zoom into the 5-minute, get a good screenshot, copy image, go back to the software, Control V, paste it. Then I would go to the 1-minute, go back to trading view, zoom into the 1-minute, and copy image, and I would paste my last one. So I am really looking onto the 15-minute right here, the 5-minute right here, and the 1-minute right here. So now I have all these. I took this. What side did I take? I went long. How much did I put on the table? Well, if I traded NQ, I'd probably say I put 1 on the table. My stop loss, this was 600. My stop loss was probably around 150. My gross P&L was 600. My planned RR, so I was probably risking 1. and my realized RR was 3. How long was I in the trade? So I would go back to my software. I saw that we entered at 3:35. We entered at 3:35. And then where did I exit the trade? When I hit this TP right here, so at 3:47. 3:47. I'm not going to do total points. So, and then in my notes, I would do analysis. Right here, I already have it down. Mistakes tagged, I could have over leveraged, trust my model, all these things. I don't have any mistakes tagged. I would put this here. This was honestly, if I took this trade, this is an A+ trade right here, because we have our S&T, took some sort of liquidity, had our change in the state, we tested it for value gap, had scaled properly, took first TP at this internal high, and took next my last PT at this next high. So that's A+ to me. And then I would type down the trade. So what was it? So the trade going into the day, I was wanting to see some sort of liquidity being swept, maybe NQ taking out a low and SMT trying to run higher, which I did. We had NQ sweep a low, in ES trying to run higher, created an SMT, inversed a 1 minute for value gap and also a 15-minute for value gap. I then zoomed into the 1 minute. We had a 1 minute change in the state. We then created a fair value gap moving higher after we moved past our change in the state. I wanted to see price tap into that fair value gap. Once we did, I placed my trade, put my stop loss at the recent low with the SMT, so it was a protected low. Put first TP at the internal high, second TP at the next high, targeted around a 1 to 3 RR, put in around 1 contract, and I could have scaled here. I could have let a runner go, but I just really wanted to get out of this trade. It was a simple trade, so I just left the trade after the recent high got swept. So here we go. We have this. No, it's an analysis. Say I would submit. I would then go on this trading software. Let it load. With this trading software, I can log day, and so it was a win. My daily rules, which this is huge, I took 2 trades max, no over leverage, 3K max loss, 4 evals, and funded accounts. I'm pretty chill. I don't usually write anything down, and I submit. And with this, the cool thing about this is I can go on my strategy and I can analyze with AI, because I have TradeSage AI, so whatever I put into my notes, it's going to use my notes and give me feedback with the trade I took. So I'm going to let it load. It should take a minute or two, and we'll see what it gives me. Alright, I loaded it all up. So as you can see, it comes with the pre-trade rules right here. This is huge. You can read over all this stuff you had, behavioral patterns, changes since last summary, actions of plan, what you should do. Don't change anything. 1 contract, strict daily limits. It's a perfect rule. This is all. You were excelled, where you improved. This shows final notes. So this software is perfect, but if you don't have a software, I think there are like Google Docs out there or Google Notes or something out there. Notations, that app works, and you can have a journal there completely free. This does cost money, but it is super worth it, because then you get AI mode, and you can ask it questions anytime. So once you're journaling at the end of the week, you want to go over stuff that was repeatable. So if you took a losing trade and you didn't have an SMT, but you took 2 other winning trades and they did have an SMT, you should hold yourself accountable. And if your trade does not have an SMT, maybe your edge is not showing in the market, because if you have took 2 winning trades and had an SMT, but you took 1 that didn't have an SMT, statistics is showing that your edge in the market is when you have an SMT. So Definitely looking back on your trades. So like let me go back. Let's see this $900 trade or this. I think I. Oh, this was really nice. So on the 15-minute, I was wanting to see. I wanted to see a New York high get taken, and we did. I think this was, yeah, pre-market. I started seeing it move down. I wanted to. We have this mini 5 minute for value gap. I wanted to see us have a turtle soup, which we did. We inversed, tapped back into the 1 minute, went down. I was like, may not enter this trade. I was wanting to see this internal low get taken, initial term low, and I entered back on this for value gap. Put my stop at this wick high because the price did manage to move higher, and did when I have a breakout move that was completely fine, and I just put on a bit more size since my stop was very tight, and I targeted internal lows, and the trade worked out. And yeah, I just looking back on your old trades and see what bad habits, what good habits, what made you win the trade, what made you lose the trade is a game changer. And that is why journaling may be boring, but it's so helpful in trading. So make sure weekly check your trades, check why you lost, why you won. So now that you know how to trade the forever model, now you need to learn how to implement it into your actual trading, how to implement it into your trading, because trading is different for so many people. The brain works completely different in other ways. So if SMTs work with you and you win trades off of SMTs, start implementing SMTs. Start only trading when you see an SMT and actually implement it in your trading, because you could watch 1,000 YouTube videos, but your data is the only thing that is going to. I mean, watching YouTube videos is going to help you, but your own data will help you because you have patterns in your brain that you want to see. And if you lose that trade, maybe cut that pattern out, see why you lost, and improve from that trade. That is the point of journaling, is to improve and learn something new. As a trader, when I journal, I learn something new every day. There's not nothing the market is doing that is going to be new, going to be different. It's like a snowflake. Every snowflake is different. Every day in the market's going to be different. But now you just have to implement your trading, your strategy into it. Where it gets to the bad parts in trading, the day you stop journaling, you start slacking off, is the day you will see regression. And as you stop journaling trades, that's when you start, your ego's getting a little high. Maybe you're winning trades, you're like, I don't feel like journaling today. That is, you're taking one step back and you're trying to take steps forward, and you're taking a huge step back, so you still have to march back over. You got to be disciplined in journaling. Trust me, it is boring, but it will help you. This is your call to action. So go on the past 5 trades. It doesn't matter if it's demo or live trading. Go back, see if you had a change in the state, if a value gap in SMT. Make sure that checklist does check out, and if you lost your trade, see why you lost your trade. Screenshot it and learn off of why you won, why you lost. Even a win, you can still learn from the actual trade you took. You can learn, oh, what could I have done to make it better? What could I have scaled here? Could I have taken partials? Could I have let a runner go? And on losses, why did I see the market the way I saw it in that moment? How could I have seen it different? What what information was being shown to me to make me lose a trade and not react correctly? Alrighty, this was episode 7, and that was journaling. Now that you know how to trade the forever model, it can now be personal to you now with journaling. So in the next episode, we are going to get into, I'm going to tie things up with the forever model. I'm going to show trades, where I put my stop loss, how I exit strongly and confidently in trades, and how I find we're going to tie the forever model up, and I'm going to show you live trading, and it's going to be beautiful. And I hope to see you there. So this is the end of episode 7. I hope everyone has an amazing rest of their day, and peace out, guys.